What's going on, guys? I'm back again today with another trading video. If you guys haven't seen my first two on how to start trading and back testing, make sure you guys go check those out. And today I'm going to be teaching you guys my strategy I use for every trade. And some of the terminology you'll need to understand it. And I hope you guys learned something from it, as it's pretty simple. I'm not getting a whole lot of views on these, but I know some friends are watching and hopefully learning from this. That's all that really matters to me. So with that being said, let's get right into this. Okay, so my strategy. So the first thing I'll do going into a day is establish my daily bias on high time frames. I'll mark out unmitigated 1 hour and 4 hour fair value gaps. Then I'll mark out session highs, lows, 1 hour, 4 hour daily highs and lows that are going to be my targets for the day. After that, we're going to wait for a liquidity sweep of one of those highs or lows with no low resistance liquidity resting above or below it. We're going to wait for a break of structure after the sweep, and we're going to need to wait for an inverted fair value gap, then a fair value gap to get filled in the reversal direction, targeting either the marked out unmitigated fair value gaps or the next high or low in the opposite direction. And you're going to want your stop loss above the break of structure, minimum 1-to-1 risk to reward, preferably more. You usually target a lot more than that, but that's going to be your bare minimum for this strategy. It's pretty simple, guys, but this is probably all gibberish if you've never looked into trading before, so I'll explain this more in depth here for you guys. So the first term, fair value gap. A fair value gap is a price imbalance on a chart where a fast market move leaves a void between the high of one candle and the low of a third candle, indicating a zone of inefficiency. It is created when institutional orders move the market so quickly that there is minimal or no trading activity between the price levels of two candles. And as you guys can see in the photo here, you got 3 candles right here. So this is the big move, this bearish candle. And your gap is going to be the bottom of this wick to this wick here. And as you can see, this one was respected. Price came down, back up into it, filled it, didn't break above it, wicked above it, but didn't close above it, and continued back down. Next term I mentioned is inverted fair value gap, IFVG. An inverted fair value gap is a fair value gap that has been broken and then respected from the opposite side, signaling a potential shift in market momentum. It forms when price moves through a traditional fair value gap and later uses the invalidated fair value gap as support or resistance. So you guys can see right here, we have this fair value gap, this bearish one coming down. Price takes out this low, so we can expect a reversal. So price reverses from that, and this candle closes above that fair value gap. Price also makes this fair value gap, and price respects it. So this will be your IFVG right here. This break of structure. Break of structure is a term in trading that occurs when price moves beyond a previous swing high or low. And that is very important. Not everything that you see is a break of structure. It has to close beyond the previous high or low. In an uptrend, it's a new or higher high, while on a downtrend, it's a new lower low. So as you can see on the chart here, price takes out this high. It looks like we're going to break structure. This low right here, not a break of structure. It's not until it closes below this last previous low on the way up that right here is now a break of structure. Not up here, not when we pass this candle, not till we close past here. That'll be a break of structure. This one's very important. So this is a liquidity sweep. A liquidity sweep is when price takes out a key level, and after sweeping the higher low, price is expected to reverse and continue in the opposite direction of the sweep. And this has to be used with other confluences. Not all sweeps cause a reversal. You want to see preferably a session high or low, 1 hour, 4 hour daily level taken out to give the best chance of a reversal. So as you can see on this chart here, this was the London session high. Price takes it out, and we get the break of structure down, close below this low, and we get a fair value gap on the way down, which gets filled, and that would be a good entry there. But you can't just take every liquidity sweep trade, like you will lose. They're not all going to play out like this, so you need to make sure there's supporting confluences to go with it. Okay, to go along with the liquidity sweep, you're also going to have something called low resistance liquidity, which is areas of price that are easily swept because there's few obstacles in the way. And these are areas where price is expected to move quickly and efficiently as it can run through these highs or lows with minimal resistance. And traders will often expect a reversal after the higher low has been taken out, like I said on the previous slide, but will get stopped out because there's low resistance liquidity resting above or below it. And you can see that here on this chart. We swept out Asia session here. You get a little bit of a pullback, but you have the New York high for PM here and the AM high, and you also have this 1 hour high here that there's nothing in the way of price taking it out. So people enter short here, get stopped out, and price will continue higher. It'll take out all these highs, and that's when it's going to make its move down. And that's when you catch the proper trade right here. So here's an example of all these put together. So everything's marked out. You got your lows, your highs that you're looking for. You have this big fair value gap here on the 1 hour. So price pushes up, takes out London session high here. You get an inverted fair value gap with a break of structure here, which creates a bearish fair value gap, which gets then filled right here. And this is where I would enter the trade. I would enter here, put my stops above here, and target this low right here. And this is a perfect setup for me and my strategy. But you could even wait to price inverts this gap here. You get a bit less risk to reward, but you could still catch that move there. This is on the 15-minute time frame, so it's a pretty big move nonetheless. And yeah, this is a perfect setup for me. It's got all the confluences I need. Beautiful break of structure. Beautiful retest of this fair value gap that's filled. And you could just tell price wanted to break down to this low. And we do continue higher after. But for my strategy, you just want to catch the reversal. You don't want to be in it for long. And like I said, 1-to-1 risk to reward. This is way more than that. You probably get a 1 to 5 at least if you entered up here. Probably more than that. So this is a perfect trade. And now I'm going to show you guys how this plays out live on FX Replay. So let's get to that. Okay, so I got the FX Replay open. This is NASDAQ on October the 6th. So right now it's at 4:30 a.m. So going into pre-market New York. So you can start marking this out here. We have our Asia session high from the previous day and our New York session high right here. So you can see price has already taken this one out. Have lows here. And lows all the way down here. So if we go up to the 1 hour, you can see this gap's been filled. We're going to have this gap here. And no highs or lows to mark out, so those will be my targeted levels for the day. So drop it down to the 5 minute here. Can let this play out till market open, which is 6:30 my time, so right here. But we're gonna watch what happens pre-market. So I'll let this play out a little bit. See, price comes back up. This high's already been taken out, but this one will be low resistance liquidity here. So I'm not going to expect a reversal off just this. As you can see, there's nothing else around. So this next high is the last one standing in the way. So I'm going to want this high to be taken out before I even think about taking a reversal trade here. So let's see what happens. You can get rid of this. So this high gets taken out. You can see we're getting a bearish candle right about to go into market open here. I don't always take pre-market trades. I don't mind it. It's often not the best thing to do because you can expect a big move right at market open. But if you see a setup like this forming, it's not the worst idea. It's just more risky. But you can now see 15 minute, this gap here. And if I were to take shorts here, this unmitigated 1 hour gap would be my target. And if I were to take profits, it would be first one here, second one here, third one here. But for this sake, we're just gonna use one. So let's go down to the 1 minute here. Let's see how this plays out. So once we break this low right here, right now, that is a break of structure. And we're still trading in this gap here. So we have our liquidity sweep, we have our break of structure. As you can see, 1 minute fair value gap, price respects. These gaps, price respects. This leads me to want to take a short here. All my confluences have been filled. I don't like to do too much on the 1 minute, but when it comes right to taking a trade, it's good to look into. So I'll hit sell here. A 1 to 3 risk to reward setup. So $600 above here. If price breaks this level, it's going the other way. So that's going to be a good stop loss there. Right above the break of structure. Like I said, we are targeting this gap. So maybe move this up a little bit actually. Target right around this spot right here. So just a little bit under 1 to 3 risk to reward, but let's see how this plays out. Speed it up a little bit. You can see we've inverted all these gaps. And price makes a big move down. So I'm already $730 in profit right now. And just like that, price wicks down, fills this gap. $1,580 in profit, just like that. Simple setup. You don't need to catch the whole move. Just got to be in at the right time. You could have entered a little bit earlier. You could have entered a little bit later. You still would have caught the move. You got to know what to target, right? So we see Price obviously wants to continue higher. Like, if you look at this, this is just going straight up, right? And we've already filled this gap on the daily, so we know we're going to want to continue higher. But to continue higher, you're going to need to take out liquidity, right? So what's the next form of liquidity we want to take out? This low is pretty far down, so the next will be this gap right here, so that's what I'm going to target, right? And like I said, if you want to have multiple take profits, you can go here and here. But for me, I just tend to stick to one. Just like that. And I'll see if it will continue down. But doesn't look like it's going to. So as you can see, price took that gap. It's going to chop around and then shoot right back up. So it doesn't get much better than that, guys. That is a perfect setup in my books. It has all the confluences. Like I said, you get your break of structure after you swept out those highs. You're inverting all these gaps on the way down. You're filling these ones. Enter here after this fill. Target the next point of liquidity, which is this gap right here. And you also have these lows here, so you can even target these lows instead. A little bit less profit, but you're playing it more safe. So when you see big pools of lows like this with a higher time frame fair value gap, that's with no lower resistance liquidity above, like I explained before, that's always a good play. And this could have even turned into a good long setup here. You could have seen these lows taken out. This filled right here, inverted, fair value gap here, filled, take a long right on this candle, nothing in the way, target this high up here. Let's see how that plays out. Another trade right there you could have caught. That one might actually even be better, because you got, it's the exact same strategy, guys. Just go in the opposite direction. You sweep out these lows here, here, fill this fair value gap. That leaves the next low here. Price doesn't seem to want to take out that low. Get your break of structure here with inverted fair value gap right there. Price then creates a bullish fair value gap here, wicks it, doesn't break past it, respects it. You enter your where's the long position here, and on this candle, stops below this gap, target all the way up here. 1 to 4 risk reward on that right there. It's an easy trade. And the first one, same thing. A short position. Then to 1 minute. Enter right here. Stops about there. Even if you just target this low here, so 1 to 2.5, almost 1 to 3. If you extend it down to where I had it, just right about here. So 1 to 2.8. Second trade was better, but both work nonetheless. So yeah, guys, it's pretty simple strategy. Like I said, it's very beginner friendly. It's a mix of adding a little bit of my own touch, but mainly just from watching YouTube videos, and I guess you could somewhat call it an ICT strategy. But it's very simple for beginners. It's very easy to understand as long as you understand these concepts, and that price is always going to want to go from one spot of liquidity to the next. And that's all you really need to know. You just need to know what liquidity to target, right? if you target the right liquidity, you're gonna win trades. And if you keep your stop losses tight, you're gonna take small losses. And as you've seen, it's almost a $1,600 win. You need to lose 3 trades before you're in the negative, right? So, but with all that being said, I think that's going to wrap it up for this video. If you guys have any questions about this, I'll be sure to answer. Just leave them in the comments, and stay tuned for the next video, and have a good night, guys.